Hi, everyone. Mynor Ramos here with Asset Legacy Planning. We are back.
And Francine Carrillo Walters with Walters Asset Protection and Mortgage.
Right. So we have been going through this short mini series on the concept of velocity banking. If you haven't had a chance to watch the two previous videos we've done it so that you can follow along, right? So it is in succession. I think it makes sense the way that we've drawn it out. We put a lot of thought into this for you guys because we want you to, have the benefit. We want you to see so much value in the information that we're putting out to you. And you know, with Walters Asset Protection, you might come and you may need a mortgage, obviously, right? Some kind of financial plan, some kind of asset plan. Well, it's more effective to do this when you really comprehend where you are, financially. And this is the tool that we're using in explaining velocity banking. Obviously, when it all comes together and we put the asset legacy plan together, it all comes together like it's pieces of the puzzle, but it all comes together. So let me go ahead and share the screen. We're going to talk about the what's up here because a lot of times you can't get people out of their financial troubles until you correct what's in here, right? This is the most powerful thing you can use to get yourself out of debt so you never ever have to worry about money ever again. I know that that's the result that people would want as they hear this concept of velocity banks. Let me go ahead and share the screen there. So if we're going to understand how this is going to work, we're going to need to understand under what authority you operate on. So we believe in a creator God, right? A creator that made us. He gave us the same essence that he carries. So we, in essence, become authors as well, right? The root word meaning originator. I know that in the mortgage industry, originator is like, it's a it's a play on words, right? I am doing a play on words, but you understand the concept is you are originating something. So the definition of authority is really the power or right to give orders. Now let me pause for a minute. When was the last time you gave your money orders?
Oh, me?
In
A
general. No, I'm
while
just
ago.
saying, yeah, in general. No, our audience. So you
In
see,
general, I hope everybody's doing it.
well, here's what I do see, to make decisions and enforce obedience of a person or an organization having power or control in a particular, usually in a political administrative sphere. Now we get the concept of, we have authority, the highest authority in a country, then it, dwindles down to, to the federal, to the state, to the city, to the right, and we get all of that. But from that aspect, when you come into any kind of money, any amount of money, any kind of wealth, you can operate that with the authority that you have been given. So what does it mean to be authorized? You have authorization, right? When you understand that you're the author that has been given authority, you become authorized to do what? To operate and control those mechanisms of creating wealth. See, if we don't get that part, you're always going to operate in fear. When you operate in fear, you become hesitant. So you don't want to proceed with whatever solution you're being provided with because your mind hasn't been changed. You have not understood your position and your status and your authority, and so you have not become authorized, not because it hasn't been given to you, because you haven't accepted it, right? And so when we begin to understand how the mindset of controlling money is just as simple as telling your money, go from here to there because this is what I'm telling you to do. Where the majority of people begin the beginning of the month with all their money, and things happen, bills happen, right? Money's got to go here, it's got to go there and everywhere. And then at the end of the month, they don't know what else is left. And so they kind of live their lives in this it's really chaotic, right? The way that most people live. So you now really understand that this is your genuine authority, an undisputed origin of your authentic authorization. So that's the way that we want you to approach looking at this concept of velocity banking and controlling your cash flow. All right. Any questions, or we'll go to the next one?
Yeah.
All right. So the case study is this. We are not going to actually go through when Denzel goes through the numbers. I'm just simply going to explain to you what he's going to look at. If he doesn't have these numbers, there's nothing that he can do for you or for yourself. And so on his coaching calls, what will happen is if somebody comes to the that 1 hour session and these numbers are not there, he'll gladly tell them, listen, you have me for this time. I don't suggest that you waste it on being unprepared. And this, you can use, take 15 minutes and talk to me, but I suggest that you reschedule this time to go over your numbers for a time when you're prepared. Now, why can he talk like that? Denzel is 27 years old. The majority of people that he talks to are 10, 20, 30, 40 years older than him, right? Why can he talk like that? It's because he understands this right here. He understands his authority. He has a kingdom authority that has been given to him to operate in this jurisdiction. So when we are going to look at this, if you don't know how to track your income, it's very simple. In the mortgage world, very, very, very similar. So if you have somebody that's simply, they get paid every 2 weeks or every month, that's easy to track. Some people are like, yeah, but I get variable income. Okay, great. Why don't we look at what you've had in the last 6 months or in the last 12 months? Last 12 months is actually a better predictor of what you might be getting, right? In the mortgage world, you need to have 2 years of consistent income in order for you to use that. So if anyone gets more than the base pay, like a commission or overtime or anything like that, what we want to do is we want to look at the total monthly income that comes into the family. Now, if there's any question about what number you're going to use, let's just say $10,000 a month for simple math. Let's say this $10,000 a month, and you were to say, well, I average $10,500 or well, then err on the side of caution and go down a little bit. Go down on the income for safety reasons, right? On the expenses, you're going to do it the other way. So on the expense side, you typically how you live. You can look at your bank statements, and the bank statements will tell you everything, right? And your credit card and your credit card accounts. So typically what you spend eating out. Typically what you spend for clothing and activities and things like that. And so on the expenses, what you want to do is go up a little bit higher on that. So let's say that you said that you spend $200 eating out. I think it's more like 800. Be safe, go to 1,000, right? Because when you tweak it and you track it, it actually comes together really nicely. So underestimate the income, overestimate expenses. Good.
Mhm.
Then you're going to want to look at your debt. Now, we're talking about mortgages here, right? So why don't you go ahead and get that free credit report, right? The free annual credit report. Go ahead and take a look at that and see what's on there, right? Try to figure out, like, man, this loan has been out there. What's this? Oh, this is a student loan. We didn't know it was in repayment. Oh, well, you got to account for that, right? So you want to look at that and know everything that you owe, right? The next thing you want to do is you want to look at your cash flow. So when you do this, you're going to figure out what your this let's just call it discretionary income is, right? What's left over, what you can operate with. This is maybe some of the money that you could use to invest on other things. Maybe money that you're maybe putting a little bit of aside for a vacation. Maybe you're putting in a little bit aside, for that down payment. But you're gonna want to know that cash flow. It's just me. Then what we're gonna do is we're gonna look at a debt tool. Like you've never heard this word before. This is one of the terms. The debt tool is the instrument that is used to move that interest from one to the other. Remember borrowing from Peter to pay Paul? Same concept. The debt tool is what creates that velocity. And then, like every good financial plan, you want to know what your cash on hand is for emergency purposes, but more importantly, so that you can know, where all this is going. So right now, what we were able to do is help you understand two things: the mind that you need, the kind of thinking that you need to go into this, or else it won't work, understanding your jurisdiction, and then the terms. These are the terms that we're going to be using as we explore this concept of velocity banking. Now, let me pause for a second because in just a minute, we're going to do another video to go over the actual rules of velocity banking. So I guess maybe at this point, any questions at all, Francine? Or
Now, well, what is the debt tool?
yes, good. You're gonna have to watch the next video.
The next video. Okay, all right.
Well, let's go ahead
We'll
and
get
do
our
the
answer.
All right. Thanks for watching, guys. Make sure you and I appreciate you watching this mini series. Make sure that you go ahead and read the description. There's going to be some links there, some additional information of how you can work with all of us if you like this. Don't forget, YouTube loves it when you go in and subscribe and you want to be reminded of the next video that comes out. So you want to make sure you hit that bell. Okay. Thanks, guys.